CPI tomorrow, Fed decision tomorrow. Do you agree with UBS that all we need is just a tame reading on inflation to keep the rally going? Or, after what we saw yesterday, Apple actually down 2%, Nvidia up 0.75% following the split. We hit records. Can tech keep us going? Which one do you think?
Well, I do think that UBS is right, that as long as the CPI remains, kind of at where it's been about 3.4%, that should be enough to keep the momentum in the market going, not necessarily this week, but certainly over the next couple of months as we get closer to election season. We do know that markets tend to be up in election years, at least until the fall. And we know also that economic growth remains resilient. And that combination of looking for better earnings, particularly after the strong quarter in the first quarter, combined with inflation that is slowly moderating, should be enough. Whether or not tech remains the leader, I think is a little separate from the discussion about Apple in particular. We do think that we are starting to see a broadening of the market, and we expect that broadening to continue as those parts of the market that are less extended, that are less expensive, play catch up to their more expensive brethren in technology.
I understand what you're saying about the broadening out, but in all fairness, Apple is either second or third biggest stock in the market right now. I want to go back to Apple just for a second.
Right.
Investors, they just didn't like the announcement. I mean, stock was down 2% yesterday, down in the pre-market today. Some people think that maybe it's going to take some time. It might be a slow burn until the products actually get unveiled. Are you worried about downside risk when it comes to Apple? It's such a big part of so many portfolios. If they fail to reaccelerate iPhone shipments, are you worried about what that might mean for your portfolio? I know we brought you on to talk about Apple before.
Right. So, and what I meant by my comment was that Apple and Nvidia are two somewhat different stories at this point. We think that the announcements that Apple made yesterday were as expected. Apple is an evolutionary company these days, and these announcements were very evolutionary. We do think there are a lot of very interesting features embedded in the integration of AI and OpenAI into the operating system, using your iPhone as much more of a productivity tool. But we have to remember that Apple stock is up about $30 since the end of April. So that's a pretty sharp move up. And we do need to see that acceleration in revenue growth. Revenue was down last quarter. We're expecting it to be up a couple percent in the June quarter, a little more in the September quarter. And that is what will drive the next big move in Apple stock.
Okay.
I wouldn't take these two-day readings, though, as a sign that the stock is going to go down, more than it's going to take a little time to pause.
All right, Nancy, one other question. We're going to talk to Tom Lee about this later. He's been one of the most vocal proponents of the small caps. You're in favor of the small caps, too. I'm just looking at the charts. I'm looking at the charts. Since the last Fed decision on May 1st, small caps are deeply outperforming, basically half of what the S&P has been. As we continue to see this higher for longer environment, what's the case for small caps? Because they don't seem to want to take this rally that everybody thinks they should.
Well, this has been very frustrating, and that it is certainly taking longer for small caps to rally than expected. The key really remains with revenue and earnings growth and proving to investors that, in fact, small cap companies broadly can outperform in an environment of higher for longer rates. What we think will be the catalyst is individual companies that are doing well, even in this higher for longer space, companies with strong balance sheets, strong earnings growth, strong revenue growth that are seeing margin expansion.